Okay, ladies and gentlemen, welcome. Great to have you here today. As always, we are live Friday, 7:10 p.m. my time. Don't know about you, whichever part of the world you're joining us from. Welcome aboard. I'm Atomashi Dania, Vestrado Global Market Analyst, and we are Vestrado. Ladies and gentlemen, we are Vestrado. Vestrado has got financial asset classes across board from stocks to commodities to cryptocurrency, indices, and so on and so forth. We are domiciled in Malaysia, Dubai. Okay. We've got representatives across the world: Nigeria, South Africa, Indonesia, Kenya, and so on and so forth, ladies and gentlemen. Welcome. Eid Mubarak in arrears to our Muslim brothers and sisters. I'm sure we had a very wonderful Eid. The markets have been swell. The markets have been beautiful, as always. Um, During the course of the past 1 to 2 days, or rather, within the course of the week, Monday, Tuesday, we had very slow activity, and then slow activity eventually we had a compensation of that yesterday and today massively across board. So much movement in the market. I hope you made some money. If you didn't make any money, you're on your own, or you've got no excuse. You have got no excuse. Okay. So today, what are we doing? We are studying volume analysis in the market. Volume analysis in the market. Volume analysis in price action. What is volume analysis? That's what we're going to be doing today. Before then, we're going to start with a recap of um, what we did or what we had on Telegram, tips we gave on Telegram, advice we gave, and so on and so forth. We're going to start with all that and see how those played out in the market. Okay. So let's get right on it. Let's see what our Telegram had for us here. Let's see what our Telegram had for us. Okay. Today on Telegram, what did we do? You have to come join our Telegram channel. The Telegram channel, by the way, is Vestrado Global. At Vestrado Global, you can search for us. Today, we had some great news across board with China retaliating with tariffs against the US. Okay. What happened? It eventually affected the market very significantly with strong movements. Then we gave advice, intraday scalping opportunities, and so on and so forth on GBP after which we captured double take profits on this guy. Okay. Next, we gave advice, intraday scalping opportunity on USD CHF, after which, about an hour after on the same day, we advised a sell, or rather a buy, because of the presence of the trend line. I'm going to show you that trend line and the patterns that formed. Okay. Then we had very nice take profits here. This video is going to be here on YouTube for you to follow, for you to watch. You can come back anytime you like, take a look, and see what we have for you. Ladies and gentlemen, now that's that about Telegram. Next, let's look at our topic proper. Okay. Let's begin our topic proper. Volume analysis in price action. What is volume analysis? Why do we need it? Ladies and gentlemen, why do we need volume analysis? It's simple. It's a very beautiful thing that many traders find across, whether veteran, beginner, okay, whatever market you're trading, many traders do not know actually the essence of volume analysis. Okay, today I want to give you that information. Today I want to open the door for you. Today I want to open the door for you to this, and hopefully you have a better trading experience, okay, in the market. Hopefully, you have a better trading experience in the market. Trading is beautiful, trading is sweet. Okay, trading is life. Once you've mastered your strategies, you've mastered your approach to the market, everything becomes as easy as ABC. Easy peasy. It no longer becomes, when you make money, it eventually becomes, is it enough? Do I need more capital to make more money in the market, ladies and gentlemen? So, without much ado, in a bit, in about 1 minute, we're going to go into the charts and look at the action right here. What do we have for volume analysis? What do we have for volume analysis? Remember, ask your questions. Don't be shy. However silly you think they are, ask, drop them in the chat section. I will see them. I will respond. Okay? I will respond to those questions. Do not fret. I am here for you, ladies and gentlemen. I am here for you. I'm Atomashi Dania, Vestrado Global Market Analyst. All right, let's get into it. Let's get into it. Now, volume analysis. Beautiful. What is volume analysis? So, you see, in simple form, many traders struggle with when to enter the market. But let's start with that. You see, the two biggest problems, first of all, of traders are one, when to enter, and when to exit. Okay, let's put that aside. Let's put this guy somewhere around here. Keep that in mind. The two biggest problems of traders are when to enter and when to exit. Okay, now Usain Bolt said something. He said he spent, I think, about 6 or 7 years or so, I'm not sure, to prepare for a race of 2 minutes. Usain Bolt spent about 6 to 7 years preparing for a race of 2 minutes. All this knowledge you've acquired, volume analysis, support and resistance, indicators, and so on and so forth, all of this exits the market. That's the issue. But how effectively you've been able to understand this information and maneuver your way around it separates you from a successful, consistent trader and a non-consistent one, ladies and gentlemen. So, in an aim to solve this, okay, in an aim to solve this, volume analysis is something that uh, many of us veteran traders apply in the market. But first off, the next thing I want to let you know here is this. It's not advisable to apply volume analysis alone when trading the market. It's not advisable to apply volume analysis alone when trading the market. You must keep that in mind. It's best applied with other strategies. Okay? Indicators, support, resistance levels, etc. Next, what do we know? So, volume analysis tells us when a large number, let's put this in caps lock because this is the most important point here. It tells us when a large number of buyers or sellers are in the market. And then last but not the least, we're going to be looking at the application of, or rather analysis of volume through three different methods. 3 or 4. So we're going to put this guy right here. Okay. Now the next point. Now the next point. How to assess volume analysis. How to assess volume analysis. Number one, some traders prefer the use of candles. The use of candles, which could be, let's start with candle size. The use of candle patterns. I'm going to give you an example of that. Okay. Such as the Marubozu. I love the Marubozu a lot. But I'm going to give you another example here, which I didn't give on the Facebook Live or most of the live sessions we've had. And then the use of indicators such as the volume analysis indicator. Okay. The accumulation and distribution indicator. All right. Next, money flow index. The money flow index. All these can help us assess volumes. And then the last but not the least, which I'm not going to talk about, if you want to know about it, it tends to inform us about early signals in the market, early entry. I will let you know. Okay. I'm going to tell you what to do, how to go about it. If you've got some deposit of up to $200 on our platform, it's trade secrets. I don't normally give this very easily. Okay. The next point here is moving averages. Moving averages. So there are many other methods through which you can assess volumes, but I like to do so using these four major um, ways. So let's put that and underline that right there. Now, we're going to start with the use of candle size. Starting with the use of candle size. Starting with the use of candle size. What's the first one? Use of candle size for volume analysis. Number one, sometimes the size of a candle can inform us, or most times, quite often, let's use that grammar. The size of a candle can inform us as to the exact volumes in the market. Okay? Say you want to see something like this. For example, we have price. Let's try to depict that for you. Let's try to depict that. Say we have price, right, from a heads and shoulders pattern right here, right? So much so, it created a period or a range of equilibrium. What's the range of equilibrium? You have this and this. This is the range where we see that the buyers and sellers sort of equate each other, are moving within the range. They are not decided yet as to which direction price should go. So what you could have is this. At first, you could have a bearish candle break past, which is not convincing enough. You could have maybe um, a line of small bearish candles or bullish candles. And then you now have the big guy right here. Oh, or maybe this is too much. Perhaps times 3 the length. The length. Okay, or the width, depending on how you look at it, of the candle. Between these 3 candles here, okay, imagine that you've been in a price range where the candles in that range are of this particular length, the length or the size of these 2 candles. And then the last candle in the mix, the third guy, forms and closes with 2 or 3 times the length or the size of the previous candles before it. You could use this. Some traders apply this in the market to tell us, okay, to tell them um, when to enter, the right time to enter. So, in marking this point, let's not forget, why do we want to know when to enter the market? Why do we want to know when there are a large number of buyers or sellers? Okay? Why do we want to know this? Let's take a break, ladies and gentlemen. Ask your questions if you're in the house. Tell us what you like to see. Ask your question related to this topic or other topics. We are here for you. We are here for you. Waiting for some people to join up. Okay. Now, um, let's continue. This is beautiful. So, look, you could map out your strategy. You could have your strategy set, right? But you have to know when there are a certain number of buyers or sellers are moving in your position. That is why it is important. Okay. But on that note, let's complete the types. We've studied the use of candle size and we've looked at the size of the candle or the width of the body of the candle. Again, you could have a range, okay, where the size of each candle, for example, looking like this, the average width like this, okay, and then say you have a range right here, then you have a nice bearish candle break past this range with times 2 or times 3 the length or the size of the body of the previous candles. That can inform you as to um, if your range has been broken, if it's the right time to enter the market. It's always advisable to wait for volumes when trading the market. We're going to look at a simple strategy right here, and volume is going to come last in that simple strategy. So let's keep going. The next step is the use of candle patterns like the Marubozu. The use of candle patterns like the Marubozu. Okay. The use of candle patterns like the Marubozu. So now, what other candle pattern do we have apart from the Marubozu? I'm going to be giving you 2 or maybe 3. Okay. Maybe 3. There you go. Good. Let's have this duplicated here. The use of candle patterns like the Marubozu. If you're my student, you're watching this, you remember that I often give two kinds of or five exceptions to the rules of the formation of candlesticks. Okay, so you could have something like this. First off, first candle pattern where the close of the candle equals the high. The close of the candle equals the high. A candle pattern like that, you're having something like this. So say we have an inverted, say we have an inverted heads and shoulders right here. Inverted heads and shoulders. Okay. Forming a range, right? What's happening to price? We see price trying to break past the equilibrium. And how does it do so? Say it does it in a way similar to this. So after seeing maybe small candles or candles that fit the daily range for that particular pair, you see a candle of this type where the close, remember, let's do a recap of candles. Let's do a recap of candles. This is the wick, this is the body, and this is also the wick. Okay, if it is a bull, this will be the open, and this will be the close. If it's a bear, let's give that, make that shaded. Okay, this will be the open, and this guy here will be the close. So what do we see? If we see something like this, where the open of the candle that breaks the range, okay, is lower with a close higher, and the high on the same level as the close. Here, this is the high with the wick, this is the low, also the high and the low. But we have a case where the close equals the high, closing at the same level with the high in an uptrend, a bull, that informs you that the bullish pressure is quite strong. Sometimes you might not see the Marubozu candle. Okay, you could see a candle that equates the length, or sorry, that's 3 times the length of previous range, but after forming has a close similar to the high in an uptrend. In an uptrend, you could see that. Okay, you could see that. This also informs you that the volumes in the market are quite high in the favor of the buyers. There are more buyers in the market than sellers. Now, on the flip side, on the flip side, say we have something like this. On the flip side, you have in a downtrend or uptrend, heads, shoulders, okay, price forming a range with the heads and shoulders, resistance. Down there, in case of the downtrend, it forms support. Okay, so you got something like this. Good. Or you have candles normal in the range, normal in the range, and then a third guy, for example, twice the length. But guess what? If this is the open, for the sake of understanding, bearish candles are black or shaded on this um, paint board. Bullish candles are white or transparent. So you have something like this: open, close. So you have the close, in this case, not the high, on the same level as the low, with twice or three times the length of the previous candles before it. That also informs you that um, the volume in favor of the sellers in this case is high. Okay, the volume in favor of the sellers is high. In this case, it's not the close equal the high. It's going to be the close equals the low. Close equals the low. We may not pay attention to these little things that matter. If you're in my mentorship class, I often give information on this. Exceptions to the rules of candlesticks formation. Okay, not all candles have the open, high, low, close as four cardinal or four different points. In cases where you have the close equals the low, close equals the high, breaking past a range as part of your strategy, you want to look at that. You want to consider that as huge volumes in the market. So we've looked at size. We've looked at patterns. Let's conclude patterns by looking at an example here called the Marubozu. What's the Marubozu? Ladies and gentlemen, the Marubozu is a perfect bear or perfect bull. Marubozu is called the perfect bear or bull. All right. Now, as opposed to close equaling the low alone or close equaling the high alone, we could have something like this. We could have something like this. Okay, where you have few candles forming within the range of price, and then you now have a nice bearish candle, maybe times two the length of previous candles, where guess what? Here we will not only have the open, the close equaling the high or the low, we have the open equaling the high and the close same level as the low. So you have open equals high, same level, low, close equals low. Of course, this is going to be bearish. So make that shaded. Marubozu, in this case, in the case of this guy, we're looking at a breakout from this range going down. Perfect bear. Okay. The presence of this perfect bearish candle here, the Marubozu, informs us as to what price to do. Welcome, Mr. Adebayo. I see you. Welcome, Mr. Adebayo. Ask your questions. Anything you'd like to know, I'm here for you. Now, what else? Okay. I'm going to be waiting up for one or two questions right here. You're free to ask. You're free to ask. Don't be shy. Don't be shy. Take a pause. Okay. All right, let's get good. The next point is indicators. For the sake of time, we're not going to draw too much on this. We're going to look at the volume analysis indicator, an example of that, and the accumulation and distribution indicator. In doing that, I cannot describe it fully enough on on the paint board. So what I'm going to do is we're going to use the charts to try to understand this well enough. We've talked about the size, we've talked about patterns like the Marubozu. Okay, now what we want to do is look at volume analysis indicator and possibly um, accumulation and distribution. Good. So say we have something like this. Um, we have something like this. Again, heads and shoulders forming resistance, indicating that price is about to drop, right? Again, now we have our indicator right here. Okay, we have our indicator right here. Good. Let's remove this. Okay, that's enough. Now, in the course of breaking past the range, going down, because the heads and shoulders pattern, don't forget, is a reversal pattern telling us that price is going to go strongly bearish. Okay, it's going to reverse. Now, say we have something like this. If you project this guy down, we could have a bar. The volume analysis consists of bars. So much so that, say the next guy that forms after it, twice close equaling the low. Remember, pattern. Okay. If you project this guy down on our volume analysis, we have it in green, meaning that the volume of the new entry, volume of sellers for the new price level is higher than the previous. So if price is higher than the previous, you tend to have it in green. Et voila. Say you have it times 2 in length of this guy. That's volume. Favoring your bearish trade, favoring your sell trade. That's volume. All right. Let's go further into our next point. The next thing to consider right now will be accumulation and distribution indicator. I'm going to call it quits on that. And I'll show you live examples on the chart. Let's go into the chart right here. Accumulation and distribution. We're going to look at examples of the volume indicator analysis, volume analysis indicator, and then we're going to be looking at accumulation and distribution indicator right there. Let's look at the chart. There you go. So what do we have? This is Euro USD. Okay. This guy right here, A and D, how do you access that? On your navigator window, okay, under indicators, you go to trend. Under trend, you see all this, leave that. Let's look for volumes. Beautiful. Volumes under indicators, accumulation or distribution. If you double click that, okay, and affix it to the chart, you see something like this. Now, I like to use the accumulation and distribution indicator to spot divergence in volume. Look, for example, look at price. If you connect the lows, swing lows on price, it tells you that price is going up. But the volume accumulation and distribution indicator connecting the same waves tells us that there's what? A downward direction. The volumes favor bearish moves. Very simple. I, for one, like to apply the A and D indicator for divergence. This is what we call negative divergence. But if you connect the lows or highs, price is telling you down, and A and D is telling you what? Up. Okay. Then it's most likely what? A bullish scenario. The indicator is probably telling you there's going to be a reversal to the upside. Ladies and gentlemen, ladies and gentlemen. So, um, this is an example. This is an example. This is how it works. If you want to know about divergence, we can't talk about divergence in this lecture for the sake of time. I'm going to talk about divergence maybe 2 or 3 webinars from now. So stay tuned. All right. Stay tuned. Next, the volume indicator, what we just did. Look at this guy right here. Let's look at when it broke the first trend line. Let's try to zoom in on that. Look, I'm going to draw a vertical line around where the break was happening. Okay. This is what we saw. Let's start with this guy right here. Vote. So, say you're a trend line trader, right? You have all this. At the break of the trend line, what happened? We saw, if you project this small candle within the range, okay, we zoom in again. All these candles, 1, 2, 3, 4, 5, 6, 7, 8, all of which are about similar in the size and the range. What happens then? We have a break. At the break, we have the close equaling the low by the patterns, using the patterns. Okay, volume using the patterns. An imperfect Mariposa, if I may. And what happened then? Look at the volume indicator. If you project it down in green, the length of this guy is almost times 2 the length of this guy. That's already telling you that the volumes for sell on the selling side, the amount of sellers are quite high. You want to be in that trade. That's how it works. That's how it works. Now let's look at USD CHF. What did we see on USD CHF? On the Telegram channel, what did I tell you? I said price was preparing for a brief bullish run. Brief because the general outlook has been strongly bearish. You see the nice, very, very sharp trend angle right there. Very sharp bearish trend angle, telling you that the outlook is still strongly bearish. We're not going to go into that today. But the lower time frames are telling you that in the next 2 to 3 hours, perhaps, there's going to be, based on something else that formed. We have moving average signal here, here, and here. I didn't plot the moving average today, but I'm going to show you that in upcoming webinars. So stay tuned. At the break of the trend line we drew, and the advice we gave on Telegram, we said there'd be a bullish run to 8590. Let's look at what happened at the break of that trend line. First, what happened? Using the size of the candle. Look, consider the candles before when the break happened. Somewhere around here. Let's circle that. Good. Around where the break happened, as it was approaching the trend line, look at the size and length of the candles. Now look at when the break happened. It's not so strong, right? If you look at the break, the major candle here that formed the break is this candle right here. It's not strong enough. But look at the candle before it. Close equals the high. Already informing you that the bullish pressure is strong. However, that's not enough. We need something that happens around the break. This guy right here. Now, is it enough based on what we just discussed for volume? No, it's not. No, it's not. Let's look at volume analysis. Now, what's the length? What's the length following that guy? Oh, volume is telling us that we have higher volumes in the market. So if the size of the candle or the pattern of the candle being no Marubozu, no close equals high, in the case of a bullish run, okay, the volume analysis is already telling us that we have increased volume in favor of buyers in the market. Increased volume. So what do we do? Typically, you want to look for continuation patterns, and that's exactly what happened here. 1, 2, 3. This guy formed the rising three method continuation pattern, retested the trend line. These 5 patterns, 5 candles, 1, 2, 3, 4, 5, 6, rising three method. And then what happened after? A strong bullish candle breaking the range of the previous bull. By size alone, this guy qualifies. It's almost times 2 the length of this, and this. By size alone, this guy qualifies. At that point, I place my buy right here. I place my buy right here. Based on size, it qualifies. Based on continuation patterns, yes. But based on the pattern of the candlestick, Marubozu, close equals high, close equals low, no, we don't have that. Based on indicators, do we see anything? Yes. Increased volumes. So what did we hit? What strategy are we looking at? What other combinations are we looking at in application of volume? This is a practical application given on Telegram. Go back and check. Ask your questions. Volume analysis. So let's try to bring everything into one context, into a whole context, okay, with in a very effective strategy. I give this strategy a lot. It's quite common, quite very often, or quite often. Now, let's form ourselves. Let's form ourselves a strategy that's applicable in the market. And how do volumes come into play? Now, I'm going to give you this simple strategy. Whether you're scalping, you're doing intraday trading, or you're doing swing trading. Strategy, a simple strategy with volume analysis. Number one, what do we want to see? Number one, what do we want to see? We want to see price at support or resistance. That's number one. Number two, I give this strategy a lot. As I said, it's on the Facebook Live. It's in our previous webinars. Go check it. Price as previous support or resistance. What do we want to see? Price overbought or oversold on RSI, or you could say you want to see negative divergence. Negative divergence. Okay? Your choice. Next, we want to see a long trend. Long trend, say 1 hour, 3 days, 1 hour chart, 3 days long. Okay? 4-hour chart, 2 weeks long. By the way, this is on intraday and for swing. Maybe on 5 minutes chart, you want to see 12-hour long or 15 minutes chart. Your choice. Next, what do we want to see? We want to see complex reversal patterns. Complex reversal patterns such as head and shoulders, okay, double top, double bottom, etc., and so on and so forth. Next, when you've seen that, you want to see trend line break, or maybe moving average early signal. Moving average early signal. depending on which indicator you use, or Bollinger Bands, early signal, Bollinger Bands, early signal. Read up on early signals on these guys. We're not going to cover that today. Next, you want to see trend line breakout or or break off previous significant swing high or swing low. And finally, after you've seen all this, you want to see a break. Then you want to see volumes. Volumes in form of the types we already mentioned. What are the types? Use of candle size, use of candle patterns, indicators, moving averages, and so on and so forth. You could also say you want to see something. Let's make this number 8. I like to see continuation patterns on lower time frames. Continuation patterns on lower time frames, e.g., such as the 5 minutes chart, 5 minutes chart, or the 1 minute chart. Some people say the 1 minute chart is just noise. I disagree. Because if you're scalping, you're going to appreciate the 1 minute chart a lot. And as I said, this strategy is effective for intraday, swing, or scalping. Okay. Now, if you're already trading the 5 minutes or 1 minute chart for scalping, you don't need to look for continuation patterns alone. The pattern there itself is going to be the pattern you trade. Take note of that. So let's put that there, not for scalpers. Okay. And then finally, number 8, volumes. So this is a very, very effective strategy. These are simple strategy amassed together to give us a complex whole. Say you're trading reversals. Okay, Davai, trade your reversals. But before you trade your reversals, you want to see all this. If you don't see all this, okay, you're not entering the market. And the last simple strategy on this list is volume. Volume tells you price is about to reverse, okay? But when price starts to reverse, when there are many buyers or sellers favoring your position, if you're seeing price about to reverse going up, you want to wait for when there are so many buyers entering the market. If you're trading reversals or a position going down, you want to wait for when there are so many sellers in the market. Ladies and gentlemen, trading is beautiful. Let's look at live example on the chart so that all this can make sense. Let's look at live examples on the chart. So all these can make beautiful and perfect sense. So what's our first on the list? We say we want to see support, right? This is USD CHF. Was there support? Was there something? Let's check. Et voila. Oh, beautiful. I love this. Look, look. Et voila on weekly chart. Okay. Price hit the previous significant swing low here. Let me zoom in. I'm going to put a vertical line right there. Previous significant swing low right there. 23rd of July. 23rd of July 2023. Or maybe 16th of June 2023. June 2023. Let's put it at that. Price hit that range. In other words, 0.8572. Okay. What did it do? It has already hit support. That's established. Going down, it hit support. What else did it do? Look, it touched psychological level. of 0.8500. Okay, let's give that a very thick line so that that is clear. USD Swiss touched support twice, not just once. Two support levels, two significant support levels, ladies and gentlemen. Look, strong support of July 2023, hit that, then went on to touch a psychological level of 8500. What else are you looking for? That's number one. Number two, is it long? Let's look at the 1 hour chart. Is it a long trend? Since when has price been going down? Now, like I said, scalping, intraday, or whatever. Look, price started right around here, 31st of March, and ended the trend around 4th of April. And what did I say? 1 hour chart, remember, 3 days. For example, on our strategy, don't forget our strategy right there. Okay. What do we want to see? We've seen price at support. Okay. Next is a long trend, 1 hour chart, 3 days. This guy is already about 3-4 days long. Okay. And you might say, do we have to wait 3 days before we trade the market? Baby girl, ladies and gentlemen, sorry about that. You could find opportunities. If you don't find it on USD CHF today, go to Euro USD. You don't find it on Euro USD, go to GBP USD. You don't find it on GBP, go to USD JPY. If you don't find it on major pairs, go to the minor pairs. Euro AUD, Euro JPY, Euro GBP. If you don't find it there, go to the exotic pairs. USD SEK, Swedish krona, USD PLN, the Polish zloty. If you don't find it on Forex, go to crypto. If you don't find it on crypto, go to stocks. If you don't find it on stocks, go to commodities or indices. There's no excuse. Make the money. Make the money. All right. Trading is beautiful. So we've seen price long trend. We've seen price at support. Next, let's assess, is it oversold? RSI. Is it oversold? I'm using tips and advice given on Telegram so you can follow across, follow through. Look, if you trace whatever happened on price right here, let's zoom in. Look, around where it hit support, massively oversold. It was already in oversold territory from here. Let's put a vertical line right there. Price was already oversold right from here. And look, there's even something, a consolation for us. There is divergence. Oh, Bože môj. In Russian, we say, oh, Bože môj. Oh my God. That's what it means. Oh, Bože môj. Beautiful. So you have downtrend on price. If you connect the same waves, uptrend. So this is called positive divergence on the RSI. This is the RSI we're using, by the way. Positive divergence. So it has met all our criteria. This is a simple strategy. Look, complex strategy with several simple strategies across board. It can rarely fail you provided you wait for the right time. Let's go back to our strategy. Let's go back. What do we have? What have we seen? We've seen price at support. We've seen price oversold. We've seen it long, 1 hour chart. We've seen negative divergence. What complex reversal pattern are we seeing? Hello? Complex reversal patterns. Now let's go back. Let's go back. There you go. Now what do we have? What do we have? Look. For simplicity's sake, right? I see 3 moving average early signals here. I won't plot my moving averages. I'm not going to show you. If you want a tip for the knowledge on this one, I need to see some deposits. I want to show that you've traded on your chart before I give you this trade secret on moving averages. But then again, which complex pattern do we see? Now, look, on 1 hour chart, do we have it? No. But complex patterns could also be tagged as falling wedges, rising wedges, okay? And sometimes complex patterns could be pushed aside when you have something similar to a channel. Look, this is a perfect example. We're not seeing any complex reversal pattern, no double tops, sorry, no double bottoms, no heads and shoulders, no inverse heads and shoulders, okay? On the 5 minute chart, same thing, no nothing. But we have price moving along a descending channel. Only channels remove the create an exception where you don't need to see complex patterns. Sometimes simple patterns are enough. But which simple pattern do we see here? For the sake of simplicity. On the 1 hour chart, I see morning star. 1, 2, 3. This is a morning star pattern. Okay, that's a simple pattern. Morning star pattern within a descending channel. So what did we do? We said a break of this trend line could see price hit 0.8590. Let's put our resistance level there. But there's something else. There's another complex pattern that we've not considered. I'm sure you're thinking the same thing. I'm sure you're thinking the same thing. Elliott wave. Elliott wave pattern. So let's look at that. 1, 2, yes. Next we have 3, right there. The waves. 4, hitting the channel, the support border of the channel. And finally, while it hit the support border and formed reversal patterns, okay, we could have it form 5. 5, the fifth wave going up. And the fifth wave, what did it do? It broke past the trend line right there. Or, if I may, the resistance border of the channel. So, next, what's the next part of our strategy? We'll see a complex reversal pattern, Elliott wave or descending channel. That's fine. Okay. Next, break off trend line right here. Break off resistance border of descending channel, which also acts as a trend line, is happened. Or break off previous significant swing high. This is our previous significant swing high here. A previous significant swing high is right here. Broke it. And then next target, 8611. You can see that. Okay. So in this case, the trend line gave us an early entry, earlier than the break of previous significant swing high. That's why I always tell my students, whatever you do, know your support and resistance levels. Trend lines also form part of support and resistance. Also help form that. Now, that's that. Do we have volumes? Today's topic. At the break, I showed you that initially. First, let's look at volume analysis. Yes, massive volume at the break. Higher volume, the green line right there. Green, green, 2 green bars. 2 green bars. Yes. Good, great volume at the break. What else do we have? On accumulation and distribution, on accumulation and distribution, nothing, no divergence. Okay, but we'll see it pointing upwards already. Next, are there continuation patterns? Yes, yes. Remember our strategy. Look, this is 15 minutes chart. Rising three method, continuation patterns. Okay. On 5 minutes chart, do we have continuation patterns? Yes. Or maybe better appreciated on 1 minute. Let's try to view that carefully. Okay. Look, uptrend, and we got something like this, like a flag pattern forming right there. A flag pattern. Okay. So price broke past the flag pattern and started going up. So continuation patterns on 15 minutes chart in form of rising three method, continuation patterns on 5 minutes chart in form of flag patterns. What are you looking for? Presence of volumes. Now on the 5 minutes chart, do we have the presence of volumes? Yes. Look, at the break of the previous swing high or the flag pattern, look, incomplete Marubozu right there. Let's zoom in. Incomplete Marubozu. Nice bullish candle right there. Another Marubozu, two Marubozus back to back. What are you looking for? Suits everything nicely. All 7, 8 of them lined up in our complex strategy, complete. So when you enter on higher time frames, 1 hour, 30 minutes, right, or 4 hour, and you're looking for entry, again, I recommend, as at the time you see volumes, look for continuation patterns or break of previous significant swing highs or swing lows on the 5 minutes and 1 minute chart. If you do that, you'll make a lot of money. I assure you. Now, that's for the USD Swiss. We also talked about the GBP JPY. The GBP JPY. What did we say could happen here? We saw something on this guy, and we said a break of 188.93 could head to 63 and 29. Okay, maybe not on reversals, because the strategy we gave is a strategy for reversals. Let's look at something else that brought in some very nice reversals right here. Good. The perfect guy to use. The perfect guy to use. We have this guy from an example of the past. Okay. Look. We're rounding up. Ask your questions. Don't forget. 1, 2, 3. Heads and shoulders. What happened? Typically at the break. Okay. There you go. At the break, right there. We already established this was a long trend. We look at this guy. Very long trend. Okay. Complex reversal pattern. Is there support there? In this case, resistance. Yes, there was resistance because price hit the 200-day moving average on the weekly chart. Look, right here. It hit the 200-day moving average right here. Okay, right here. And then formed reversal patterns back to back on the 4-hour chart. So let's look at what happened when it broke the range. It already informed us that a reversal would happen. Let's look at RSI. Look, RSI already told us price, it was markedly overbought at several times. Here, 1, 2, 3, 4, 5. Overbought region. I won't say heads and shoulders. It formed a range. So it formed heads and shoulders back to back, several times. We can spot that later on. We don't have time. But it already formed support. Hit the 200-day moving average. At the range, the neck of the range, the support level of the range, right there, what happened? A break. Now, if we do it in form of trend lines, let's try to zoom in. Look, nice long candle based on the size of this candle. Ask your questions. Based on the size of this candle, it already tells you large volumes in the market. Large volumes in the market. Remember, volume analysis. Number one, via the use of size. Number two, via the use of size of the candle, the patterns such as Marubozu, close equals high, close equals low. Okay. In this case, close does not equal the low, but the length or the width, depending on how you look at it, very massive. It's almost times three that of the previous candles before it. What else? Around this region where it happened, do we have continuation patterns? First, do we have volumes? Let's look for volumes. Look, at the break, what happened? Nice green. Let's move the line away and you see it. Green times two, the range, the previous range, when it was massively, before it had the break, before it broke the trend line right here. Look at this guy. Okay. This is the length. This small guy here. And then when the break happened, the length is times two, almost times three on the volume analysis indicator. What else are you looking for? If you decide to look for continuation patterns, let's highlight that place, and then we'll call it a day. If we highlight here, put our two vertical lines so we don't lose out, make them blue. We don't miss out on them when searching for them. First, this is 4-hour chart. 1 hour, like I said, is a strategy that's effective intraday or swing or even scalping. 31st of May. That's the 1st of May. I'm trying to get the range. MetaTrader doesn't really give you. Yeah, we're getting it. There you go. On the 1 hour, same thing. On the 1 hour, look, massive break. Massive break. Okay, let's try to zoom in. Rectangle. Yes, continuation pattern on 1 hour chart. Rectangle. And price continued. Let's go to the 30 minutes chart. On 30 minutes chart, what do we see? Are we able to mark it out? If the chart allows us. There you go. Look, same rectangle right here, rectangle right around here, continuation pattern. What else do we see? If you zoom in, you see, look, here we have the rising three method acting as a reversal pattern. It's a continuation pattern telling us that price should go up. This bull followed by 1, 2, 3, 4 candles. But it didn't go up. This bullish candle didn't break past the range of this first bullish candle. So we have an inverted hammer form afterwards and a bearish candle that broke past the range. Continuation patterns back to back. And if you want to be more specific, you could say a descending triangle. Descending triangles often tell us downward direction of price. All right. So on this note, ladies and gentlemen, I think we're going to call it a day. We've tried. We've looked at what is volume analysis. We've looked at Telegram, the tips we gave. We looked at some examples. We looked at swing trading strategies using the 4-hour chart. We spotted a range using on the USD CHF using the strategies gave. We gave a complex strategy using 8 simple strategies in all. And then we talked about the different types of volume analysis. Rounding it all up, we looked at the USD JPY, USD CHF, GBP JPY. We didn't go so far on this guy. Euro USD, yes, we looked at that. I think we've done quite enough today. Thank you for joining us. It was great to have you. I'm going to have a pause of 2 minutes just so to accommodate 1 or 2 questions on the chat section. If you have them, ask. I am here for you. I am here for you. Okay. So we'll have a pause of 2 minutes, after which we'll end the live session. You can ask your questions wherever you are. Aha. While we're waiting, let's look at some trade opportunities. This is gold, daily chart of gold. We see price moving in a nice ascending channel right there. Now, what has it formed? Gold has formed, look, it broke past the resistance border of this channel. Looked like it was. Now it's coming back down, returning into the channel. It formed the heads and shoulders. 1, 2, 3. Okay. And then we had this. If you were in this trade today, at the break of the trend line, formed resistance, heads and shoulders. Let's try to mark that. We're waiting for questions. Anybody who's got them? That's the left shoulder. This is the head. And if you may, you could call this the right shoulder right there. Okay. Or this guy, your choice. And then you could call this the neck. Neck 1 and neck 2 of the heads and shoulders pattern. Using the trend line analysis, price broke past the trend line here. Let's zoom in around where price broke it. What do we have? Volume. Are there volumes? Et voila. Massive volumes on the bearish end. As at when the break was happening, we have a nice imperfect Maribozu, very long, based on size of the candle alone on the 1-hour chart. This long bearish candle right here already tells us massive bearish volumes. And where the nice bearish candle formed and broke the trend line, if we check our volume analysis indicator, massive volume, higher than previous. You see that? Next, look, when it broke past it, price went back up to retest. Do we have continuation patterns there? 15 minutes? No. 5 minutes? At the break? At the break? 5 minutes? Yes. Look, let's take this guy away. He's blocking the view. At the place of the break, what happened? 5 minutes. Look, look. It broke past the sandwich pattern here, formed the bearish candle that broke past the significant swing low. Okay. Then we have 1, 2, 3, 4, 5, 6, 7, 8. 8 falling method. Let's highlight that and put that in a rectangle. If there are no questions, we'll be rounding up now. You see, the bear that broke the range of the trend line, the green line, this guy, all the candles that formed, we had another bearish candle that came around to break past the range of this bearish candle. Look, the last candle in that range, this one right here. And then what happened to price? Continuation down. Continuation down. Do we have it on the 1 minute? What do we have on the 1 minute? Look, nothing peculiar here, but we have something similar to a descending triangle. You have to learn to train your eyes. Look, let's delete this. We have something similar to a descending triangle right here. Yes, we have continuation patterns. Et voila, you see that? Continuation on 5 minutes, continuation on 1 minute, continuation patterns, presence of volumes. Even on the 1 minute chart, we have a perfect Marubozu form right there at the break. Testament to the bearish pressure here, and at the second break right here, back to back. What are you waiting for? Volume analysis, ladies and gentlemen. All right, it was great to have you with us today. Trading is beautiful. Today was quite long because volume is quite important. Okay, and in many cases, it can separate you from being a successful trader or an unsuccessful trader. Sometimes it could be just that one thing that makes you successful in the market. One thing. Maybe it's volumes. Maybe you have the right strategy. Maybe you have good scalping strategy, intraday or swing strategy. Maybe. And maybe that one thing you're missing is you did not know that there's something called volumes in the market. Today, you know. All right. Thank you for joining. As always, I'm Atomashi Dania, Vestrado Global Market Analyst. Very soon, we'll be having our conference or seminar in Kano or Kaduna. Those in that region, you better stay tuned. We have Vestrado. We got tight spreads from 0.4 to 0.8. Okay. We got financial asset classes ranging from stocks to indices to forex to crypto and so on and so forth. We got representatives and offices across board: Nigeria, Kenya, Indonesia, Singapore, China, Dubai, and so on. Thank you for joining. Remember, the trend is your friend, and trade